Temperatures only climbing into the mid-50s. Of course, with that wind, it'll feel more like the upper 40s for the afternoon. Overnight wind starts to relax a bit. We'll dip down into the mid-30s heading into our Friday morning, into the low 60s for Friday, with a few extra clouds to finish off the work week. That's your forecast with the WSIC Weather Center. I'm meteorologist Chase Myers.
Prioritizing your health is one of the best ways to take care of yourself. From routine visits to the joys of pregnancy to the illnesses that stop you in your tracks, Iredell Health System will be by your side. Learn more at iredellhealth.org.
Harrison's is the home of Work, Western, and Wow! We're the Southeast leader in Carhartt, and nobody has more in-stock work boots. The store is filled with Ariat, Cinch, Wrangler, and more. Get great clothing and footwear for the whole family at Harrison's. Find us on Norman Station Boulevard in Mooresville.
The following is a paid program and does not necessarily reflect the views of WSIC.
Hello and welcome to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here, 4 o'clock hour on a Thursday. If you're a 9 to 5er, you got 53 minutes, 25 seconds until we hit that 5 o'clock bell, and I appreciate so much you spending this time with us here as we give attention to, and perhaps we'll even spark a little conversation regarding items of financial and economic importance. Now, you know, as a previous listener to Dollars and Cents here, we're talking on any number of subjects. We're going to be doing it again here today. Yeah, we're going to spend some time on the markets. I know, been hearing from a lot of you about what's going on in the markets here. Told you this stuff was going to happen. And we're going to talk a lot about it during today's show. But in doing so, you recall, again, as a previous listener to Dollars and Cents, that nothing that we're talking about here is intended as a specific recommendation for you. Meaning that even though we're talking on specific companies, we're going to be doing it again here today. Sometimes we're doing it in a positive light, sometimes maybe not in so positive a light, that in doing so again, that nothing is intended as a specific recommendation for your circumstance. We strongly recommend that you reach out to your tax advisor, to your financial advisor, or if you'd like to reach out to us at North Main Financial Group, love to hear from you. Love to chat about your particular financial situation, see if there are ways in which we might be able to be helpful to you. Online, you can find us at northmainfinancial.com. That's north like the direction, Main like the street, financial.com. Northmainfinancial.com. We have a contact page on there. Feel free to leave us an email. Let us know. Give a phone number, whatever will be the most convenient way for us to contact you. Again, at northmainfinancial.com. You're also welcome to call us here in the studio. Producer Reese, he'll get the phone. I can't promise you we're going to get in on today's show. I want to make sure that you're aware of that. Don't want to disappoint anybody, but I promise you we're going to take down the subject matter, and certainly if I can't get to it today in the next week's show, I'll be sure to bring it up and to make sure that what the content here it continues to be relevant and helpful to you. 844-STUDIO-4, that's 844-788-3464 here in the studio, 844-788-3464 here in the studio at WSIC. And again, I appreciate so much you hanging with us here. 4 o'clock hour on Dollars and Cents presented by North Main Financial. All right, let's get into it. I have a whole list of things here. Actually, if you would take a look, which if you're on the socials, you might be able to see it anyhow. I always have the black and white newspaper in front of me because I'm just old and like that kind of stuff. But I also have a very up-to-date iPad as well. This is not a recommendation to buy, sell, or hold Apple stock, but I also have a very up-to-date iPad here as well that has all kinds of stuff written on it. But I think, especially in light of today's markets, and certainly what the markets have been like over the last couple of weeks here, that I really do need to spend more than usually my end of the show allotted time on it, where I talk about where things are market-wise, what we see going forward. There's been a tremendous amount of news that has come from the markets, and really in conjunction with the movements made at a federal level, so from the Oval Office and through Congress here, that I feel like I got to spend some time on it. So let's talk about it. Let's put it out there. Let's talk about the good, the bad, and the ugly. You may agree, not agree with it. It's entirely okay. This is not a political conversation. This is an economic and financial conversation as we're looking at it here. But let's take a look at it. So if we're looking at where the markets are right now, literally as of the time that I came online here or onto the live broadcast, or as of the time of this recording, another rough day. Pretty much, I would say pretty much across the board. That is true unless you were holding oil and energy stocks. Most oil and energy stocks today were relatively in the green. Not all of them, of course, but most of them were in the green by the time that I came online here. But certainly those things which have done the best over the last, I'm going to say 18 months now, close to 2 years, that have really led the market performance are those things which are pulling back the most right now. Now, that's not to say every company. That's not to say that all the companies that have done well are in the negative this year. That's just not true. Because even though they have pulled back the most, some of them started the year so hot. Once again, they're still in the positive for the year. If you take a look at some of these companies that are out there, these big tech companies, but the ones that have pulled back the fastest and the most here over the last couple of weeks are those companies, generally speaking, which have had the most appreciation over the last year and a half. Now, if you're a previous listener to Dollars and Cents, I don't want to say I'm some kind of Nostradamus here or something, but maybe this is a little bit of an I told you so moment. Come on. We talked about this. We've been talking about this for months now. Yeah, it's probably a little early. You're right. Probably a little early talking about it. But that's the way I am. Going to be early to buy, early to sell. There's no doubt about it on this end of things here. But joking aside, we talked about this. We talked about in 2024, even though all of the major stock indices look to be quite positive, especially if you're looking at S&P 500 or the NASDAQ composite, that we talked about it being a very, relatively speaking, small number or narrow market of stocks which did well. And really, it was large technology companies. Yeah, I'm looking at you, Meta and Google and Netflix and Apple that had done so incredibly. And then you sprinkle in those semiconductors. Holy smoke. Palantir on the software side of things for AI. NVIDIA, of course, for some time, the largest company on the planet in terms of market capitalization that was out there. But a whole bunch of things in that large capitalization technology space. And we talked about at that time how important it was to have appropriate expectations going forward. As I said, I hope all of you owned all those big winners about 4 years ago. That would have been pretty much the optimum kind of scenario. But to expect, because we don't think in straight lines, we shouldn't think in straight lines, right? But we do, that was going to be the same kind of growth rate going forward. Folks, that just doesn't happen. And now we're starting to see that. And that's very, very important. That's why it's so important to take market movements in context and understand that just because something has done well, maybe even exceptionally well, off the chart well, here over the last 18 months, doesn't mean that the next 18 months are going to be the same way. It might. I know there are those of you raising your hand saying you owned NVIDIA from back in 2016. Well, for all 4 of you out there who did, all right, I'm very happy for you. All right. Now, for the rest of the investment universe, probably not the case. And it's very, very important that we take the movements in the market in context, both in a positive and in a negative way, meaning when the markets move positively and when they move negatively. That all of that is to say, whether it's whatever the impetus is, whether it would be something macroeconomic, whether it would be geopolitical, which is largely what this is at this point, the market's selling off primarily due to a general confusion about what the economic impact of tariffs and other federal policies are going to be at this point. It's also given the market a reason to sell. We talked about that. We were due for a technical correction for the better part of a year insofar as the market technicals are concerned or charts were concerned, that we were really due for a technical correction. We've largely had that in some of our largest names. Again, large cap technology names. But even among those, even beyond that, we have a number of companies that have done very well positively and have even performed positively here over the last couple of weeks. So it's very, very important to keep that in context because things get overshadowed. I mean, I was just listening to one of the more popular business news programs. It's a national, international program. I'm not going to mention it out by name, but as would be expected, I mean, you would think that the proverbial sky was falling. Well, folks, it's just not true. It just isn't true. Now, if you had all your bets in certain AI, large cap technology companies, yeah, you've had a rough couple of weeks. There's no doubt about it. You probably have seen quite a pullback in terms of your overall portfolio value. But if you were well allocated, maybe looking at different sectors, non-correlated sectors in your portfolio, probably thinking this isn't all that big of a deal, at least to this point. We'll see what happens next. I appreciate you hanging with us here on Dollars and Cents, presented by North Main Financial. We're going to take a few moments to hear from our sponsors, coming back on WSIC.
There's more of Dollars and Cents with certified financial planner Joshua Dobi on the way from 105.9 100.7 WSIC.
Well, that wind's still kicking. Gusts 30 to 40 miles an hour as we get into our Thursday afternoon. Our sunshine is back, though. It's a much cooler day of weather High temperatures only climbing into the mid-50s. Of course, with that wind, feel more like the upper 40s for the afternoon. Overnight wind starts to relax a bit. We'll dip down into the mid-30s heading into our Friday morning, into the low 60s for Friday, with a few extra clouds to finish off the work week. That's your forecast with the WSIC Weather Center. I'm meteorologist Chase Myers.
The WSIC app is available now wherever you get your apps, featuring local deals from great local businesses like Nina's Boutique.
Here is your WSIC community calendar. Bin 110 in Cornelius presents live music Thursday through Saturday. The Ben Gatlin Duo, John Sullivan, and Retroflex headline 3 straight nights of live performances. Visit bin110.com for more information and their full upcoming music schedule. We'll see you this weekend at Bin 110. Friday night, Boatyard Lake Norman welcomes Mostly Crew, a tribute to one of the 80s hard rockin' bands, Motley Crue. Tickets are available in advance or at the door. The Mostly Crew concert begins at 8:30 p.m. Friday night at Boatyard Lake Norman in Cornelius. The Plant House in Huntersville presents the 7th annual Plant Market Friday through Sunday. Spring is just around the corner and the Plant House is kicking off the season in style, including incredible deals, drink specials, and local vendors. Follow the Plant House in Huntersville on the socials for more info and exclusive discounts. Saturday night, the 500 Club in Statesville presents live music with Andy Buckner. This country artist blends honky-tonk, party anthems, and heartbreak healers. Enjoy live music at 6 p.m. Saturday at the 500 Club with the Andy Buckner performance. Speedway Motorsports is promoting the most affordable kids' tickets in professional sports. The campaign covers $10 tickets for the NASCAR Cup Series and free tickets to kids 12 and under for NASCAR Truck and Xfinity Series events across 14 race weekends in 2025. Visit CharlotteMotorspeedway.com or Ticketmaster.com for more information and details. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
Merlefest 2025, presented by Window World, returns April 24th through the 27th in Wilkesboro, North Carolina. Hear the Avett Brothers, Bonnie Raitt, The Dead South, Watch House, Wyatt Floors, I'm With Her, Leftover Salmon, The Warren Treaty, The Steel Drivers, and many more. For tickets, visit merlefest.org.
We're back now with more of Dollars and Cents with your host, Certified Financial Planner, Joshua Dobi, on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second quarter of today's show. That's a football reference. And we're going to talk football. We do every single show. And if it's not football season, we talk about thinking about football season. Producer Reese and I, during the break there, were just talking about that once again, we feel it's our weekly obligation to remind you that our Carolina Panthers, at this point, have absolutely the same possibilities as every other team in the NFL to win the Super Bowl next year. No doubt about it. We do. Everybody gets a 0-0 record. I don't want to hear anybody from Philadelphia calling in and saying you get some kind of bonus points for winning the Super Bowl. You're with me, Producer Reese, right?
Call us crazy if you want.
I mean, it's everybody's 0-0. Nobody gets bonus points for doing well last year. No, everybody's 0-0. We got the same opportunity.
It's not like if you win a certain game, you get 2 extra points.
That's exactly right. There's absolutely no carryover from season to season. I love that. I love that about football. I love that about the football season. And we're looking forward to our Carolina Panthers being ready to go this coming season. So hold on. I mean, it's as we like to say here at WSIC, it is still very early. You never know. You never know what's going to happen. All right, let's go ahead and keep going here. We were talking in the first segment about what was happening in the markets. Felt like I had to spend some time on that. We're going to be talking more about it. And really what I want to leave you with, if you happen to miss that first segment, which, by the way, if you did, after the conclusion of this show, all of our recordings, all of our shows available on that WSIC app. If you don't have that yet, you can find the WSIC app on the Google Store, on the Apple Store. You can go on there, download it. What's really nice is, and I really like this because I do a fair amount of travel. No matter where I am, all I do is go into the app, press the button that's literally on the first screen. So even someone as technologically challenged as I am, you just press the button, you get the live broadcast. Doesn't matter. Don't need to be within radio range of anything. It's really kind of nice, that WSIC app. So if you're looking on the what you can also do, you can look at the live feed here on the cameras and looking at what we were talking about there in the first segment. We were talking about the markets. We were talking about how things pull back, and that's okay. And that's really what I want to leave you with here as we're talking about the markets. Yes, I'm going to talk about it in the fourth quarter of today's show as well. But it's okay when the markets pull back. Frankly, it's healthy. We really need that. Markets move in cycles, both short term and long term. Very, very important that they not only grow over time, but that they also have periods where they pull back. That's how investor behavior is tamed. I mean, think about it. As much as we all theoretically would like for our portfolios to go straight up in value all of the time, we really wouldn't have a market there. It really wouldn't be the case because we would eliminate the risk element of a market. And when you say, well, I don't want to have any risk at all. Well, okay, that's fine. There's nothing inherently wrong with that. But if you're truly talking about investing, there is always risk involved. It's just a measure of how much risk that you're willing to take, meaning how much variability around an expected return. All right, here we go, 101 here. How much variability around expected return are you willing to absorb in the short term in exchange for the possibility of long-term higher than average or the possibility of higher than average return or on your investment? That's really what it is a function of. And if you're doing that kind of thing, and you understand that pullbacks in the market are not only natural, but they are necessary in order for the market to perform in a healthy style way. So we're not even, if you look at the indexes, I mean, yeah, the indexes are negative for the year here in the first almost 9 weeks of the year, but we're not talking about anything significant at this point, a couple of percentage points, because we started out pretty hot to start the year. Now, if you're looking at some of the stocks off their highs, you got things down 15, 20, 25%. I'm looking at you, Marvell. Came out with by the way, ticker symbol for Marvell, Mary, Roger, Victor, Larry. Came out with what I thought was a reasonable kind of quarterly report, but boy, that is not acceptable in the large cap tech space, especially the semiconductor space where Marvell is. I'm not talking about the Mattel. I'm not talking about toys. I'm talking about semiconductors with Marvell. And I'm not talking comic books either. And but they came out with what I thought was a very reasonable quarterly report, down 17%, literally overnight as they came into the trading day today. I think it just happened to be bad report, wrong time kind of thing. But that can happen, especially with some of these high flyers. All right, let's keep going. I want to talk about a couple of well-known companies with some notable news items that are sitting out there. So let's get into this a little bit. Walgreens, the fairly ubiquitous, I would say, drugstore with literally thousands of locations around the country, it is likely going to be taken private. And when I say taken private, I mean that a private equity firm, in this case Sycamore Partners, huge group, they literally have billions under management there. They're going to be taking, at this point, looks like it's going to be the case. I have to say looks like they're not at the end of or not at the close, excuse me. They are at the end of their due diligence, but not at closing yet. Ticker symbol, by the way, currently for Walgreens, Walter Berry Alpha, WBA, not a recommendation to buy, sell, or hold the stock. This has been in the mix for a while. This is not new news. We're just getting pretty close to the close time. And I just want to bring that out there, bring it out there because of a couple of things. One, whenever a company is shifting from a publicly traded company to a private company, things are going to change. And I say that not in a negative light. There are things that are going to change that are going to be positive. There are things that are going to change that are going to be negative. But you're going to want to watch that. There are probably going to be a number of additional locations for Walgreens that are going to close down. That's happened a lot here over the last year and a half. That's probably going to happen more as they seek to be more efficient, clean up their balance sheet some. So I think that's going to be happening. I say that so that if you're using Walgreens right now as your drugstore and you go there on a fairly regular basis, just kind of keep your eyes open. And if things shift or they say that particular location may be closing down, you'll know why that's going to be the case. $10 billion deal, $10 billion. So, I mean, big, not the biggest certainly, but certainly a big deal. And again, as a publicly traded company, if that closes in the way it's anticipated, Walgreens will come off the trade sheet and they will be a privately held company again by a very large private equity firm called Sycamore Partners. All right, let's keep going. And I got to talk about these folks, especially when we're talking about consumer. Man, I mean, I don't know about you, but I mean, at least in my household, this is one of the family favorites when it comes to the retail experience. I'm looking at you, TJ Maxx and Home Goods and Marshalls, all owned by the same company. The parent company is called TJX Companies. That's the ticker symbol as well. Tom, Joshua, X-Ray. Not a recommendation to buy, sell, or hold the stock or the bonds and that end of things. Good quarter. Really good quarter coming through the Christmas season. Very positive in terms of the sales uptick that they had there, a lot of traffic running through their stores, so slightly above expectations in terms of the report for the past quarter. I would say somewhat tepid or reserved, though, in terms of their expectations for the balance of calendar year 2025 here. Interesting to hear that, especially when we're thinking about the consumer. I'm going to have some additional consumer news here in just a moment, but they were, and I thought it was interesting because TJ Maxx tends to be a space where lower prices, more traffic, but now with Walmart, and going to bring up another one, Target, TGT, Walmart, WMT, Walter Mary Tom, Target is Tom Green Tom, not a recommendation, buy, sell, or hold either of those company stocks or bonds, that there are a lot of reservation. I would say more than just the conservative amount of reservation about the balance of the year for each one of those, and somewhat different buyer groups or customer groups in each of those, but also a lot of crossover. Meaning you're getting a lot of the same folks that go to a TJ Maxx and Walmart and Target, not perfectly, but you get a lot of crossover there. So when we're looking at that and their reflections on what the balance of the year looks like, again, from a retail experience standpoint, tough to find many other entities that would be more indicative of where the consumer is in terms of spending than those three. I mean, just literally not just tens of millions, hundreds of millions of visitor visits in each of those places each year. So very omnipresent, not only in each of our communities, but also in terms of customers who are using those on a daily basis. So when they're tepid or a little bit reserved in what they're seeing for the consumer for the balance of the year, it's hitting my radar screen. So we're going to be watching them very closely here and see what that may mean in terms of where the consumer is. Because you recall, if you have been at all a listener here to Dollars and Cents, which I hope you have been, and if you haven't, you still have time to recover and to become a good listener here. But when we're talking about the economy or our GDP, gross domestic product, the consumer, roughly 3/4 of our economy. We are a spending economy, folks. As the consumer spends, so we go in this economy. So if the consumer is slowing down, that's a very, very big deal, and we're certainly going to be watching that very closely. All right, let's move on here. I told you I was going to give you another collection of data points here with regards to the consumer. This is big. This just came out this morning. And, we're looking at a couple of different entities in terms of the data sources for this, but I'm talking about automobiles and specifically automobile loans that are delinquent. You've heard me talk about this, I know, on a couple of different occasions here on Dollars and Cents over the last year or so, and specifically that we were bumping up against some historically high levels of automobile loans that are in delinquency. By the way, just a couple of data points that I pulled out of the white papers that I was reviewing as I was doing some research on this. Average car loan right now is over $40,000. Over $40,000. Yeah, you see me wrinkling my eyes if you're watching on the socials here. I know you're going to get the old man kind of thing. When I was younger, no, it really is true. I mean, when I was younger, it was a lot cheaper. I mean, I remember buying cars for $250 a piece. And I'm not that old. I mean, I'm old, but I'm not that old. I was buying cars for $250 or $500 a piece. Average car loan, about over $40,000 right now. Average monthly payment, over $700 a month right now. $700 a month. I mean, we're talking about a tremendous amount of money. So obviously, car loan interest rates are higher than they have been in the last decade and a half. Cars are more expensive than they have been ever in terms of the purchase price of things. So it doesn't surprise that we have higher interest rates, larger loans, and the highest monthly payments in terms of what's required. It doesn't surprise that we're bumping into a higher amount of delinquencies. All three, 30, 60, and 90-day delinquencies are bumping against some historical levels. So that's definitely something we're going to be watching. We're watching the automobile manufacturers on that as well. Does that mean we're going to have higher inventories? Are cars going to get turned in faster back to the manufacturers? Are the sales going to slow down simply because there are fewer folks in the buying public who can afford? Specifically, I'm looking at new car sales. Maybe that means a little bit of a benefit for used car sales. I don't know. Definitely folks probably are going to be keeping their cars longer. We're definitely seeing that. So again, coming back to the consumer, how does the consumer feel? Do they feel comfortable? They feel confident? Are they willing to stretch, or are they getting a little bit more reserved? We're going to dig more into that in the second half of today's show here on Dollars and Cents. We're going to be back here in just a moment on WSIC.
Keep it right here. Dollars and Cents with Certified Financial Planner Joshua Dobi will return shortly on 105.9, 100.7 WSIC.
Well, that wind's still kicking. Gusts 30 to 40 miles an hour as we get into our Thursday afternoon. Our sunshine is back, though. It's a much cooler day of weather. High temperatures only climbing into the mid-50s. Of course, with that wind, it'll feel more like the upper 40s for the afternoon. Overnight wind starts to relax a bit. We'll dip down into the mid-30s heading into our Friday morning, into the low 60s for Friday, with a few extra clouds to finish off the work week. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Inspire your team and gallop to greatness. Our horses at Willow Equine are outstanding at working with people on leadership and team building skills, perfect for corporate retreats. Visit willowequine.com as you gallop to greatness.
Would you like to change your health situation? Improve your current health with a wellness consultation with me, Fred Lowry, pharmacist and doctor of natural medicine. I'll work with you to reach your individual goals. This includes a review of your current medications, supplements, diet, and lifestyle choices. This is a progressive way to improve your current health position for your future. Great for individuals or couples wanting to make improvement. Call me at Lowry Drug in Statesville, 704-873-2247.
Hi, this is Bob McIntosh with the McIntosh Law Firm in Davidson. Since 1997, we have been committed to providing our clients with competent, caring, and experienced legal services. Learn more at McIntoshLawFirm.com.
Year-end specials, Randy Marion Chevrolet in Statesville. How about this for a bargain? 2024 Chevrolet Equinoxes. These are the LT models as low as $22,770. We have got over 25 of these vehicles in stock. You pick the color, drive it home today. That is a Randy Marion Chevrolet Statesville special. Again, $22,770. $22,770. Only a couple thousand miles on these vehicles. Come see them today. Randy Marion Chevrolet in Statesville.
No radio? No worries.
Just ask Alexa to play WSIC.
This is a Bloomberg Money Minute. President Trump is backtracking on tariffs for Canadian and Mexican goods. He now says he will ban tariffs on items that are exempt in the USMCA, the trade deal between the countries. But it's just a pause until April 2nd. That's when Trump is expected to start unveiling plans for reciprocal duties on nations all around the world. Trump initially said he was imposing tariffs on Canada and Mexico over immigration and because they were not doing enough to stop the flow of fentanyl into the U.S. The U.S. trade deficit in goods and services widened to a record in January. American firms were scrambling to buy from abroad ahead of tariffs, sending the value of imports to an all-time high. There is some good news on the home front. Mortgage rates fell for a seventh straight week, posting the biggest weekly drop since the middle of September. Freddie Mac says the average for 30-year loans is now 6.63%, down from 6.76% last week. Stocks are down between 1.2 and 2.7%. I'm Nancy Lyons, Bloomberg Radio.
Home of the best talk.
WSIC. Local starts here.
Now more of Dollars and Cents with Certified Financial Planner Joshua Dobi on 105.9, 100.7 WSIC.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second half of today's show, 26 minutes, 15 seconds until we get to that 5 o'clock bell. I appreciate you spending that time with us here as we're giving attention to all things economic, financial talk, and markets. Gosh, first two segments kind of overran with that. I sprinkled in some company-specific news there, specifically looking at the private takeover, very likely private takeover of Walgreens, talking about Marvell not having a good quarter, NVIDIA down 20% off of the highs there as well, and then talking about the consumer, looking at TJ Maxx or TJX companies, and also with regards to some updated data on delinquencies from automobile loans and hitting against some historic highs there. Now, you may be saying, well, does this mean all things are negative? No, don't think in straight lines on me. Don't do it. You can do it. You can break the trend and not do that, because I know coming through the television shows and on air, online, if you listen to podcasts, golly, do we do it. We just do think in straight lines. Things are going up. We act like they're going to go up forever. Things are going down. We act like they're going to go down forever. I'm not saying every single person does that, but shoo-wee, my experience is overwhelmingly that's certainly how folks tend to think. Dangerous to do that, because newsflash, not really a newsflash, markets never work that way. Never have. I know we live in an instant world in this day and age. I blame the microwave, but that's a whole separate segment. That's a whole separate show. We'll talk about how the microwave may have ruined us in terms of expectations and patience. That's an entirely probably a psychological show that we should have on here, or at least with regards to buyer sentiment on things and investor patience. But no, when we're looking at where things are, it's important to keep perspective. We talked about this for months. Very, very important not to get too high on the high and too low on the lows. Ever. I'm going to say it again. You never get too high on the highs and you never get too low on the lows because, folks, we run in cycles. You don't have to believe me. Look at the last 80 years of market history. I promise. Cycles. Right? It really does work that way. I'm not making that up. All right, let's keep going here. Got to be a little bit anecdotal. Producer Reese and I, during the break there, were talking about some very important things. And chiefly among them, we were talking about whether it was a thumbs up or thumbs down on stuffed crust pizza. Now, I know that pizza is a very high-level discussion, and I'm not joking here. Very high-level discussion for many folks, meaning that there are some very, very strong feelings about pizza. I mean, Producer Reese, I know you got some feelings on this.
Right. And I have, it could be a hot take. People could agree with me.
All right.
I'm going to say Domino's has the best crust.
Wow, okay.
Because of the garlic seasoning that they put on it.
I see. Okay.
In my opinion, it's unmatched.
See, that's very interesting. Great segue, Producer Reese. Thank you for that, because I was going to be talking about the announcement from Domino's Pizza, which, by the way, publicly traded company, ticker symbol David Paul Zebra, not a recommendation to buy, sell, or hold the stocks or the bonds. They're getting in the stuffed crust pizza market. And I say that with no, I guess maybe surprise. That and actually the article that I read in doing my due diligence on this said, most of the public thought they already had stuffed crust pizza. They never had it. They took a look at it and they had it. They tested it in a couple of markets, never brought it full on. Papa John's and Pizza Hut and other ones have gone all in on it, and now finally Domino's. Kind of interesting.
Well, that's what I thought.
Yeah, that they already had it.
You haven't thought of that until now?
Well, I think they thought of it, but they wanted to get it right. They talked about testing it for years and didn't want it to, I guess, take away from other things that they were doing, other things they were pursuing. Right. But I thought kind of interesting kind of thing. Now I'm going to ask you another big question here, Producer Reese, because I definitely have some stronger feelings on this. Are you more thin crust, thick crust? Meaning, are you more New York style thin crust, thicker style, Detroit, Chicago style pizza? I mean, where are you going on that?
I'm not thin crust.
Okay.
But I also don't want it to be like super thick.
You don't want it to be
maybe somewhere in the middle.
Somewhere in the middle, which I think is where a lot of folks are on that. Now, I like the thin floppy crust.
I'm actually getting Domino's tonight.
See, how about that? See, not a recommendation to buy, sell, or hold the stock, by the way, just because Producer Reese is buying pizza from Domino's tonight. But at any rate, but it is. I mean, it is a strong. We talked about that during the Super Bowl, right? That there are some very strong feelings with regards to pizza, and certain folks like certain styles of crust. Other folks, there's the whole square circle, combination thing. Some folks, very much on the square, very much on the circle.
There's a lot of different ways you can go with pizza.
You really can. Now that's this is just my personal preference here. You can probably see that. I don't like some of the stuff. I mean, there are certain places to go with pizza,
right.
my opinion, and there are certain places not to go with pizza. I mean, fruit.
Wait.
This is just me. Fruit has no place on a pizza.
And I don't remember you were talking about someone putting pickles on pizza.
I know. We've talked about pickles on pizza. We've talked about pineapple on pizza.
No.
Producer Reese has voiced his opinion, which is just an opinion, not the views held by, of course, WSIC or any of its affiliates, all that good kind of stuff.
Pickles are worse than the pineapple.
You're going to cross a lot of folks. Pickles are incredibly popular everywhere.
Yeah.
I mean, on pizza and apparently, I mean, just a very, very desirable food product. I didn't realize that until I read that article about, the pickle pizza from that manufacturer. So anyhow, so Domino's getting in the stuffed crust pizza end of things. Again, not a recommendation to buy, sell, hold DPZ stock or bonds, but kind of interesting. Let's keep on let's call it the food realm of things here. We like to talk food on here because that's one of the words that begin with F that we like to talk a lot on here. Yes, football. Yes, food. Yes, finances as well. But so we talk a little bit about food here. Keep it anecdotal. Keep you on your nose. Kroger, one of the largest supermarket chains in the world. Certainly one of the largest ones here in this country. Ticker symbol Kelly Roger KR. Not a recommendation to buy, sell, or hold the stock or the bonds. Anecdotally, sidebar, just in case you were not aware, Harris Teeter, which is very well known here in the Carolinas as one of our local grocery stores. Harris Teeter is owned by Kroger, meaning Kroger owns them. They still kept the Harris Teeter label, the Harris Teeter brand, the Harris Teeter name, but they are wholly owned by Kroger. The CEO unexpectedly stepped down, and it was kind of cryptic, and I'm sure intentionally so, that because it was unexpected, both by I would say the larger investing public and even those folks who watch and track Kroger stock and the analysts end of things. The announcement was pretty unexpected, and it was just broadly defined as being due to personal conduct, but also Kroger was very quick to say in that did not involve other employees, did not involve any shenanigans with the financials, which of course, the investing public would want to know about that. But it said due to personal conduct, violating Kroger policies, and so the CEO has resigned effective immediately. And there's an interim CEO in place. One of the members of the board of directors for Kroger has stepped into place there. And then on top of that, they had quarterly earnings this past week and did not look good. I don't think that was the reason why. I don't think it was just, meaning the quarterly numbers weren't horrible. They just weren't all that great, but not a good week of news for Kroger. Again, not a recommendation to buy, sell, or hold the stock or the bonds, but some quarterly earnings that really kind of missed the analysts' expectations. On top of that, this is not to be pouring on the negative here on Kroger, but important to bring it to the table for discussion. You heard us several months ago talk about their proposed takeover, their proposed acquisition of the Albertsons supermarket chain, and that was a $20 billion proposed takeover. That just floundered. That went away. There were some antitrust concerns on that, so there was some headwinds that they would have encountered with the DOJ in trying to get that approved. But they walked away from it. $20 billion merger possibility with Albertsons, and so it's been a little bit of a tough string here for Kroger. However, I was looking at Kroger and in the same kind of light we were talking about Walmart, with Target, with TJX, excuse me, there in the previous segment. I'm watching what that means for the consumer, because I don't need to tell you, it is more expensive to go to the grocery store right now. Holy mackerel. And I mean everywhere. It's just amazing. I mean, when I walk down those aisles, and this is not saying that, the grocery stores are bad or the food manufacturers are bad. I'm not saying that. That's not anything I'm saying here. It just is a lot more expensive. And so, looking at those kinds of things and looking at the consumer, we talked about the auto loans that are having some challenge as well. I mean, it's a challenging time.
So I actually have a question for you.
Yeah, what you got, producer Reese? Fire away.
Do you think there will ever be a time in this country where it'll be more expensive to go to the grocery store than to eat out?
That's a great question, and I appreciate that, and thanks for putting me on the spot here. You didn't even tee me up that you're going to be asking me that question, so you give me the heavy lift on that. It's a great question, actually, in many ways, because there are prepared foods now at so many of our grocery stores. You can spend as much easily in a grocery store for a meal as not. Now, there are other options, obviously. Meaning there are ways to spend less in the grocery store experience to provide a meal for yourself or your family.
Right.
But you can pretty easily, especially in the prepared food section, you can spend as much in a grocery store as you do at a restaurant.
Because my mom will come home from grocery shopping like once a week, and she'll tell me that it was $200.
Yeah. It's amazing. I mean, I remember, and I know I'm going to show my age here. I remember when the idea of spending $100 in the grocery store at a single time was just off the planet. Like,
and now you do that almost every day.
I mean, I figure I left a cart somewhere, right? I mean, I must have left half my groceries somewhere in the store if it's only $100. I mean, and there's inflation. There's the natural cost of increasing prices. You could say the same thing about so many things in our economic and financial experience, but it is true that it is more expensive. It certainly has become a lot more expensive here over the last several years. So does that say anything about the consumer? Does that say that consumer behavior is changing? We talked about, relative to what the consumer buys in the grocery store now has shifted. there definitely has been a change in behavior overall in that kind of thing. But does that mean that we should be concerned about where we are with economic growth and that things are going to... Don't know yet. We're going to be watching that, obviously. We'll probably be watching that and talking about that here in the fourth quarter of today's show. But definitely going to be watching that because the consumer is so important when we're talking about the growth of us as a country. Well, we're going to be coming back for the fourth quarter here in a couple of seconds here on WSIC.
Dollars and Cents with your host, certified financial planner Joshua Dobi, continues straight ahead on 105.9, 100.7 WSIC.
Well, that wind's still kicking. Gusts 30 to 40 miles an hour as we get into our Thursday afternoon. Our sunshine is back, though. It's a much cooler day of weather. High temperatures only climbing into the mid-50s. Of course, with that wind, it'll feel more like the upper 40s for the afternoon. Overnight wind starts to relax a bit. We'll dip down into the mid-30s heading into our Friday morning, into the low 60s for Friday, but a few extra clouds to finish off the work week. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Here is your WSIC community calendar. Bin 110 in Cornelius presents live music Thursday through Saturday. The Ben Gatlin Duo, John Sullivan, and Retroflex headline 3 straight nights of live performances. Visit bin110.com for more information and their full upcoming music schedule. We'll see you this weekend at Bin 110. Friday night, Boatyard Lake Norman welcomes Mostly Crew, a tribute to one of the 80s hard rockin' bands, Motley Crue. Tickets are available in advance or at the door. The Mostly Crew concert begins at 8:30 p.m. Friday night at Boatyard Lake Norman in Cornelius. The Plant House in Huntersville presents the 7th annual Plant Market Friday through Sunday. Spring is just around the corner and the Plant House is kicking off the season in style, including incredible deals, drink specials, and local vendors. Follow the Plant House in Huntersville on the socials for more info and exclusive discounts. Saturday night, the 500 Club in Statesville presents live music with Andy Buckner. This country artist blends honky-tonk, party anthems, and heartbreak healers. Enjoy live music at 6 p.m. Saturday at the 500 Club with the Andy Buckner performance. Speedway Motorsports is promoting the most affordable kids' tickets in professional sports. The campaign covers $10 tickets for the NASCAR Cup Series and free tickets to kids 12 and under for NASCAR Truck and Xfinity Series events across 14 race weekends in 2025. Visit CharlotteMotorspeedway.com or Ticketmaster.com for more information and details. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
Merlefest 2025, presented by Window World, returns April 24th through the 27th in Wilkesboro, North Carolina. Hear the Avett Brothers, Bonnie Raitt, The Dead South, Watch House, Wyatt Flores, I'm With Her, Leftover Salmon, The Warren Treaty, The Steel Drivers, and many more. For tickets, visit merlefest.org.
Dollars and Cents continues now. Here's your host, certified financial planner Joshua Dobi on 105.9, 100.7 WSIC.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much. Hanging with us here, fourth quarter. You made it, that football reference, to the end of today's show. Not quite the end. Don't leave yet. Still got 11 minutes and 52 seconds until we get to that 5 o'clock bell. And I appreciate you spending that time with us here. We've been talking a lot on the markets today. I know, talking a lot on the markets and the consumer. Felt like that was appropriate, especially because, largely expected, meaning that it had to happen at some point. You never really know the reasons in advance when markets have pullbacks, or frankly, when they're going to take off as well. Folks like to point to certain things, make it binary, make it single variable kinds of things. It never works that way. Never. The market's too complex for things to either take off or to pull back due to one particular event, unless you have something, especially on the negative side, of extraordinary measure. I'm looking at 9/11. I'm looking at the assassination of John F. Kennedy. Those kinds of things definitely were binary by nature and definitely just had huge impacts on the markets, not only in the immediate but in extended ways. Outside of those extraordinary impact events on the negative side, generally speaking, you're very rarely going to be in a binary kind of situation where single variable, single response kind of movement in the markets. That's what's true now. I know a lot of folks right now, this is not a political discussion, you know that. A lot of folks right now want to point to tariffs as the reason why the market's moving negative. Definitely in there, definitely a large variable, because, and it's not because necessarily of the tariffs themselves, but the challenge the market is having in quantifying the financial impact and economic impact of the tariffs. Because it's not just the number. It's not 10, 20, 25%, whatever. It's the duration. I think that makes sense, right? I mean, if it's the kind of thing that is going to last a week, probably not a whole lot that's going to be impactful, positive or negative from that. If it's going to be a year, yeah, it's going to be much more of an impact. If it's going to be permanent, definitely an impact. You call that trend kind of stuff at that point. So at this point, we don't know. I mean, there's been so much variability already in the tariffs. I mean, literally, as of the time of this live broadcast, announced this morning, which was just a couple days after that they went into effect, meaning the tariffs. I'm looking at Mexico specifically, 25% tariffs against Mexico. Well, now, as of a couple hours before we went on air here, there was the announcement that cars that were covered under a certain pact, and I had the letters and I don't have it in front of me right now, nuts, that they were under a certain pact or manufactured under a certain pact with the U.S. would be exempt from the tariffs. That's just a couple of days later. And that's a huge amount coming from Mexico there. So those kinds of things, that's why I'm saying the market's kind of in a washing machine right now, because the market is having practically an impossible time in trying to quantify what the tariffs are actually going to mean. So tariffs have impact? Yes. Do the tariffs, are they the only points having impact? No. As I said at the front end of today's show, I'll repeat it here. It's important in that when you're looking at the markets and understanding why things move in the ways that they do, markets move sometimes, especially after they've had a hot run, just to go down, meaning just to pull back for folks taking gains, folks locking in gains. Algorithmic trading that basically says if there's any negative news out there, sell. You think I'm joking. There are algorithms that basically say that. If there are certain words that come across certain news wires, that they sell. So, I mean, it's literally that kind of crazy out there sometimes with algorithmic, sometimes called machine trading that's out there. So it could be that. It could be tax season. I mean, it is tax season, but it could be for those reasons that folks are selling because they have big tax bills. So there are all kinds of things that play into that mix all the time. That's just a handful. There are dozens, if not hundreds of variables which are all playing into the market at the same time. Because remember, it's not just the overall market, but it's also that same kind of quantum variability with each individual sector and then company. Because there are things that are true with a certain sector that are not true for the overall market. There are then things that are true for a specific company, which are not true for the overall sector. Very, very, very important to keep that kind of thing in mind. I mean, I'm just going to use the semiconductor industry because it's very popular right now, and just look at it in terms of the difference in performance of some semiconductor companies. And I'm going to point out a couple. So NVIDIA, right? They're the easy one. Largest company in the world at one point. Has had a spectacular run here over the last 6-8 years. Amazing. There are a whole bunch of semiconductor companies that haven't done nearly as well. Unfortunately, I'm going to pick out a stalwart here in the U.S., and that's Intel. Intel has had a terrible time keeping up on a relative basis with other large semiconductor producers around the world. It hasn't had anywhere near the same kind of performance. As a matter of fact, largely negative, at least outside of a spurt here about 3 or 4 months ago, whenever we were talking about the incentives plan that was offered by the federal government to build semiconductor manufacturing facilities here in the U.S. Outside of that, Intel's had a miserable time. So there it is, same sector, 2 different companies, categorically different investment experiences. I mean, if you've owned NVIDIA 6 years ago until now, feeling pretty good about yourself. If you owned Intel, unfortunately, from 6 years ago until now, really not feeling all that great about yourself. By the way, ticker symbols real quick. Nancy, Victor, David, Alpha, NVIDIA, not a recommendation to buy, sell, or hold the stock. Intel, Indian, Nancy, Tom, Charlie, not a recommendation. Buy, sell, or hold that stock either. But it's important that you understand as you're doing your analysis, as you understand where things are, that you understand what you own, and then, perhaps more importantly, why you own it. It's okay to own just about anything out there if it fits with A, first of all, a healthy understanding on your part about what it is, and then B, that you're doing it for reasons that are attuned to your goals. What we find in these hot markets, and we've seen it again, we call it the hot money sometimes, but it's absolutely true, and we're seeing it again play out here. There are legions, and I mean legion. This isn't just a couple of folks, or it happens with institutions as well. It's not just individual retail investors, but there are legions of investors that own these hot stocks that have absolutely no idea what they do. And I say that firsthand, listening to some of these folks talk about, why they own NVIDIA or why they own Palantir or why they owned what. Now, I think most folks know what Tesla does at this point, but I mean, there are any number of companies that are out there that, anything that had to do with AI. I mean, there was a while there, it seemed like every company that had AI in the name was a hot stock. People didn't have any idea what it was. And you could see that because money would whoosh in and it would whoosh out. It wasn't investment money. It wasn't even trading money. It was just that hot money that was following literally a couple of letters that were in proximity to each other. And that's dangerous business. I'm not saying it's wrong. You may be a day trader. You may be one who's in and out of stocks multiple times a day. Again, there's nothing that is inherently wrong with that, so long as you understand the risks involved with something like that. If you're doing that with the idea that you're going to, that you're going to double your money every 2.5 hours, well, that's probably challenging. I've never met anybody who can do that over a prolonged period of time. Maybe you're one of them. That'd be a first time. I'm always open to new ideas and folks who may have cracked the code, if you will, in being able to make that happen. But generally speaking, doesn't happen. And that's why it's important when we're going through cycles like what we're going through right now. Again, the time to do it was about 4 weeks ago, 5 weeks ago, as we talk about constantly on this show here on Dollars and Cents. The time to make decisions and to make tweaks is into strength, not into weakness. Sometimes we have to make it into weakness, right? Life happens, unexpected events happen. We don't have a choice. We have to make tweaks and adjustments to our financial plan because of things for which we could not have prepared in advance. This isn't one of them, folks. This isn't. I mean, if nothing else, if you were listening to this show, and frankly, if you've been in this business long enough, these kinds of things are going to happen. It's just like the sun rising in the east and dropping in the west, which, by the way, it doesn't really rise and drop. That's a separate discussion for another show. But you know what I'm describing here. It's important, very, very important. Understand what you own, understand why you own it. And I know I pound on that, and I know it's a very simple idea, but it is not one which is widely known in the markets, and especially after things have pulled back. So folks are looking at things and say, well, I went in and now it's down 25%, or I went in, now it's down 50%. Yeah, it happens. Now, if you really are attuned to what you're owning and why you're owning it, you should look at that and say, well, shoot, if I loved it up here, now that it's down 30%, I should really love it, and I should buy more of it, right? I mean, that's kind of a rational thought. Except we don't do that as the investing public. Generally speaking, I know, wait for it. You know what we do? It's crushing, but this is the reality. We, generally speaking, on the hot stuff, tend to buy high and sell low. You don't have to believe me. Just take a look at it. Take a look at trading volumes. I know this puts you right to sleep. Take a look at trading volumes at the zenith of a market, meaning the zenith of a stock, the absolute high of a hot stock, and take a look at the trading volumes at the absolute bottom of a hot stock. They're records. I mean, they are literally record on the buy side at the high, and they are record on the sell side at the low. It is without fail. It is an amazing phenomenon, and yet we, the investing public, do the same dumb things all the time. We do it over and over and over again. What we're trying to do here on Dollars and Cents, not cents with a C, but cents with an S, right, is we're trying to bring some sense to this so that you don't have to go through those same kinds of variabilities. Does that mean that markets will never go down if you listen to what we're saying here? No, not going to say that. Definitely can't. There are compliance folks out there to haul me away in chains if I say that. No, not saying that at all. What I'm talking about are prudent, long-term, healthy financial decisions that when you have some opportunity, right, if you have some upside, you have some, let's say, growth above expectation kinds of things, that to pump the brakes a little bit. Take some of that off the table. Stuff it in the proverbial coffee can or something that is not as market sensitive as whatever may have been your winner. Does that mean you'll miss out on some upside possibilities? Yes, promise you, it'll happen. I'm early to sell and early to buy. Go ahead, Producer Reese.
I never thought about that.
Yeah.
You said we buy high and sell low.
We do.
Why do we do that?
No, we're crazy.
I never thought about it that way.
Because we think in straight lines. We do it. I know. No,
yeah, but I never thought about it that way.
We do. The absolute zenith of the hot stocks is when most folks are buying. The absolute pit of selling is when it's at the bottom from a pricing standpoint.
I know what the trends are like.
Yeah, it's crazy.
When you think about it, why?
Because we think in straight lines. So we think about when it's really at the top, and we don't want to miss out. Right, fear of missing out. Then we start chasing it. And so we, and I'm putting a we in quotes there, we're all chasing at the high. And then, of course, we've had a miserable experience. So we bought it at the high. Now it's cratering.
Right.
Think,
but buy when it's low. That's what to do.
We should do exactly the opposite, and we don't. All right. But if you listen to the show here, maybe we can prevent some of that ongoing so that you don't have that same kind of experience. But it is a phenomenon, and we're seeing it again. We're seeing it happen here, especially in the hotter stocks. That hot money is beginning to leave. But remember, when you're talking about your portfolio, look at it, analyze it, make tweaks, but for the right reasons. Make sure it's in keeping with your goals, in keeping with your plan, and if it's not, then maybe you shouldn't do it. All right, I appreciate so much hanging with us here on Dollars and Cents, presented by North Main Financial. Tune in with us next week, Thursdays at 4 p.m. here on WSIC.
Serving you better than ever before. WSIC, Statesville, W290DK Mooresville, W264.